same thing, right? Here we came off uh, being up around the resistance level, down to support. Now we're back up, and here we are the last 2 days on this resistance level. It's kind of waiting, okay, to see what's happening. Seeing a little bit of a curve on the MACD, seeing a little bit of crossover on the stochastic here. So I'm just being cautious. Why would I want to go in at this point? Here's where I want to be in. Here's where I want to be out in my world
Yeah.
of thinking.
Welcome to the Best of US's Two Regular Guys show. This is Mark over there, and I'm Trent, and we're your hosts today. And we're going to get into non-farm payroll adjustments along with sector rotation and looking at some sector charts and indice charts in the direction of those, where those are going, along with a handful of other things that we'll end up talking about throughout this video. So let's get going. Hey,
Well,
Mark.
how's it going?
It's all right.
Well, it's interesting.
It
It's
seems like a
interesting markets.
tsunamis coming.
Yeah, it's we had 2 great weeks of swing trade setups in the platinum channel, and then just, I mean, I had 23, 24 positions on the paper trade portfolio just last week, and we have a few more this week, not as much as last week, because we're seeing the markets slow down a little bit. And we'll show you the charts, and we'll show you the charts of the sectors of the market too. And we'll just, it's like it's waiting for a decision at some point. And you can't always go up and down. But when that Kerry trade came out from China, from Japan, that gave us excellent opportunities. We had to sit out for about a week and wait for the setups to come. And when they did, man, they all came. And now we're back to the point where the setups have, gone through their process, and we've made our profits and our gains, and we're getting out. Can they still go higher? Yeah, they can. Do you want to? Well, it depends on your risk tolerance. My risk tolerance is, I would rather have a profit than a gain and then a loss any day. And I'll take my profits percentages at a time. Again, I'm in it for the bunts. I'm in it for the singles. I'm in for the doubles. I don't swing for the fences. Okay. And that's how we make it happen. This week, we have a lot of things going on. We have retail uh, companies are coming out. Macy's came out, and they had a pretty bad report about the consumers and about their revenues, and their guidance went down. Target came out, and they were better than expected, but still they were looking at flat to 2% growth coming forward, but their stock went up. The market looks for anything to be happy about, but get into the weeds of Target, and they're having the same issues that you see in Macy's. Target I think they got to the cost cutting part when they saw the storm on horizon a lot faster than Macy's did. And so that helps their bottom line when you're looking at that. Macy's is like, I was reading something about their CEO talking about, yeah, we need to go down to, what the cost of our paper bags are, and make everything, cheaper, for our customers. So, we're seeing what's happening. I think Target already did that. Then we have today the FOMC meeting minutes come out, and that was from July, the end of July. And so here we are, 21 days later.
Yeah.
So a lot has happened since then. We had the Kerry trade, the market dumped, the market's come back. We have all these retail reports. We have retail sales, which is supposed to be great, not adjusted for inflation. We've got labor reports out and this and that. So it's a lot different world than it was 21 days ago. So for me personally, I'm not going to put too much emphasis in what I see in the FOMC report. And then, of course, the Jackson Hole symposium, I call it the Fed vacation for elite Federal Reserve people and financial reporters in Jackson Hole. Starts Thursday, and then on Friday, Powell will come out with his speech. And again, 2 years ago, he came out with, I think he was using the word fear or something, and tanked the market. I don't think he's going to do that, but we'll see, but however, let's talk a little bit about employment. Okay. We talked, last time about these reports that come out, and they always seem to be being revised down. Okay. Why? They come out, they're great. The market goes up. Next month they come out, they're great. But in the bottom half of the paragraph, it's, and we revised from, 1% growth last to, 1/10%, and no one even knows that. Right. So the shape of the U.S. labor market is changing. Okay, job growth is slowing. A new survey data released Monday shows that Americans are starting to feel increasingly unsettled about all this. So the Federal Reserve Bank of New York, okay, latest survey on consumer labor market experiences and expectations shows that job, wage, and benefit satisfaction all sank in July. In addition, the survey showed that fewer people were employed, a record share of people who are looking for jobs, and an average expected likelihood of becoming unemployed rose to 4.4%, also the highest on record for the survey, which was started 10 years ago. Okay. Does that sound like joy, and
Right.
resilience? So
Yeah.
today, the non-farm payrolls report, the Bureau of Labor Statistics, came out with a recent revision that showed that the U.S. job growth for the year ending in March 2024, and this is March, okay, 2024, starting in April 2023, was weaker than initially reported, with 818,000 fewer jobs added. So take those off, okay? They're not there. They were manufactured, okay? This significant downward adjustment suggested the job market was cooling more rapidly than previously believed. No kidding. Haven't we been saying, for months and months, look, these job reports don't jive with what we're seeing. We're seeing all these layoffs, but we're not seeing it in the jobs reports. Well, here they go. They revised it down. So this result magnified concerns that the U.S. labor market is no longer resilient to
Concern.
restrictive interest rates following July's softer than expected payroll count, strengthening the case for the Fed to deliver aggressive rate cuts this year, which you and I have talked about. Once they do that, then something's broken and we go into recession. So it's a catch-22. So we'll see what happens in September, and it'll be interesting to see what Powell says, coming up on Friday. So just, buckle in, grab some popcorn, and we'll see what happens.
Yeah.
Here's another thing. We always hear about the consumers are resilient. The consumers are resilient. As long as the consumer is spending, the economy is strong and growth is up and GDP is up, even though the government is what causes
The
our
majority
GDP
of it.
government spending. So a growing number of Americans are pumping the brakes on spending as they continue to face elevated prices for everyday necessities like food, rent, and auto insurance. New findings published by Empower show that 62% of Americans feel their purchasing power and income in relation to prices is decreasing due to persistent inflation. Another 82% said their money does not go as far as it used to. Additionally, 79% of respondents noted that many household goods like cereal and chips are dwindling in terms of serving sizes. They call that shrinkflation. Okay. Who hasn't seen that? Open your bag of chips or your big box of Cheerios, and it's like a quarter way down,
Yeah.
So about 1/4 of respondents, 27%, said they have hit a pricing limit and aren't willing to pay anything more for grocery staples, or else will cut the item from their shopping list altogether. Interesting. Okay, so is the consumer resilient? Is everyone happy? Just look into what's going on into the reports and the surveys we have. Food prices are up 21% from the start of 2021. Shelter costs are up 21.6%. Energy prices are up 32%. Higher prices are particularly devastating for lower income Americans because they tend to spend more of their already stretched paychecks on necessities and have less flexibility to save money. Okay. Again, we've talked about McDonald's and the trouble McDonald's is having, Burger King, Wendy's having to go back to value meals. Denny's is closing restaurants. Denny's of all places, the home of the Grand Slam.
Right.
Okay. Subway is having a big meeting with their franchisees sometime in the future here in the United States to talk about, what can we do to get our customers back? Well, I just saw, some of, remember you got the foot long sub for $5 or whatever back in the day.
Yeah.
And now it's like $15. Okay.
Huh?
Yeah.
What?
So people are like, maybe you bring back the $5 sub or something. So,
How could they do that?
People have memories that, this is what I used to pay for because it hasn't been that long, 3-4 years ago. And now look what I'm paying for it. My paycheck hasn't gone up. I'm starting to feel the pain, and that's what they're seeing. You talked about it, that your friends and some of your acquaintances who are in the upper income above, mid and low level,
150,000 and above in income.
And plus they're feeling the pain, So,
and they're coming out publicly on Facebook and talking about it, which never happens. They talk about wine, happy hour between 5 and 7, but now that has gone away, and they're talking because happy hour is no longer happy.
Yeah,
they're now it's not affordable. Now they're talking about inflation. Now they're talking about real inflation.
Right.
And to me, when it gets to that category of income, then it becomes real loud. And I don't think you can ignore that. You
Yeah,
know,
and it's a dual problem with the Fed continually to, release all these treasury bonds that we buy personally, as traders, and because the interest rate is good enough. But they have so many short-term treasury bills, out there floating around, at above 5%, funding this government spending. And so what does that do when you start creating more cash out there? The value of your dollar goes down, so the value of
right.
your purchasing power goes down. So we have inflation taking away our purchasing power, and we have printing of money through treasury bills taking down our purchasing powers on top of it.
Yeah. It's interesting. Somebody commented the other day, somebody I know on Facebook about inflation, this and the other, blah, blah, blah. And I'm like, what you're not aware of is your dollar devalues as they print more of it. So there's more supply of it. And it takes away your purchasing power. So what is real inflation? Probably around 15 to 20%.
At
That is
least.
really at least. And I see it through educating a child in college and their predicament. They're like the school that Emma goes to is going to. They told me they went from 35% 2 years ago of on-campus housing application to now it's over 55, 60% are now coming. And the reason they are is because it's more affordable to get housing through the college versus off-campus housing. And I'm like, that's a predicament for you. She goes, yeah, we got a waiting list of over, 500, 600 people and we can't help them. And I'm like,
Yeah.
wow, wow. And I think, as Emma pointed out to me, she's like, Dad, if this is too much, I can sit out a quarter. I'm like, well, what the hell are you going to do for a quarter? You know, go to school.
Move back in with you.
Yeah, well, no. I don't know what the meaning of empty nester means because I haven't had it yet. It just seems
I
like a
don't, I don't think
rotating circle.
I think the only way your nest will be empty is if you pass away, because once you have kids, they're always going to be there at some point.
Yeah,
So,
and I
which is
don't.
fine. That's what
It
families are.
is. It
Yeah.
is exactly. So,
It's
but everybody's feeling it.
well, I think, and we've talked about it, and I've said, the last leg of the stool of the break is going to be employment, and we're seeing 4.3%, and we're seeing layoffs, and we'll go over that Friday on our Zoom Platinum call. And I don't see anyone hiring. I'm seeing layoffs here of 1,400, 42 here, 15,000 there, but I'm not seeing anyone saying, "Hey, we're hiring 15,000, we're hiring 400, we're
Right.
hiring 50." You're just not seeing it unless it's the government. The government is hiring. Okay.
Yeah.
So if you want to work for the government, there you go. Uh, and
Yeah.
so again, and that's going to break. And once that breaks, and the employment tends to go kind of slowly up, like we're seeing it,
Right.
4.3%, and then it just skyrockets. We could be, anywhere between 6 to 8%, here in the next 6 months to 12 months. I think that's just
Yeah.
my opinion. But once the consumer slows down, which we're seeing it, that's the leading edge.
Yeah.
Companies don't need people anymore. Okay.
So, Mark, let's flash forward to September 17th in the Fed meeting. If they raise or lower interest rates, that is historically the start of a recession.
Something's broken.
Something's broken. If they don't raise interest rate or lower interest rates, I keep thinking they're going to raise them, which they may want to.
Wow.
Yeah, that's bold.
Yeah. Wouldn't that be an interesting day to watch? Yeah.
Yeah, right. But what if they don't? How does the market interpret this? How
If they
do
if they don't lower,
Yeah, they just stay where they're at.
I don't know. They've been doing it for 18 months or however long. So, I think the market just looks at it and keeps going higher, because I don't really think the market wants them to raise or lower rates. They say they do. They want the option for them to lower rates. But I think the market knows that once they do lower rates, there might be a little bump in the markets, and in the buying, but once they know it's something's broken and that normally means recession is coming, you're going to see the markets go down. And besides, what are they going to do? Are they going to lower a quarter point? They're going to lower half a point. What's it going to take? If they lower a quarter point, big deal. Okay.
Right.
By the time that gets through the system, what's that going to do?
Yeah.
People are already strapped, credit cards, people are already strapped on their car payments. People are now looking at, higher mortgage rates, you can't buy a house. Or if you do have a house, your insurance and your property taxes are more than your principal and interest. Okay. So
Yeah.
you're getting slammed any way you look at it. And so, drop it a quarter point. How's that going to help me in my groceries? It's not. Okay. And then we
Right.
talked a little bit about, the phoniness and the stupidity of price controls on food. Okay. And even the Federal Reserve has a piece out talking about, let's leave that in the history book. Let's not go there because
Right.
that's just been disastrous in the history of anyone or any country that's tried it.
Yeah.
And why that's a policy in modern day, or a plank in a platform of a party, a major party. I don't know even who allowed that. It just blows me away.
I think it just shows the disconnect Washington has with the United States. And, hopefully we have the power to rectify that, to bring, somebody in who can readjust where things are going. But like you've always said, the market isn't always the economy until they
No,
converge.
no.
And maybe we're getting close to that. Maybe we're getting close to that day. And we can see that in some of the charts.
Yeah, definitely. I mean, that's why we took our gains from the last couple of weeks and these great setups we've had. And personally today, and for the swing traders, I said, look, I'm just going to sit out until I see more setups, because I just wait for the market to present me the setups. If it takes it a week, a day, a month, that's what I'll wait. And I have
Right.
no tolerance for losing money or putting my money at excessive risk just to be in the market. I'm not in the market all the time. I'd rather throw it in a treasury bill at 5.25%, and sleep at night than worry about what happened a couple of weeks ago, with the Kerry trade,
Yeah.
which I don't think we're done with yet. That's just me personally.
Well, and you think about like that whole subject of the yen carry trade. Um, yes, it unraveled. We saw it unravel on Friday, or excuse me, Monday, August 5th, and the size of selling that represented. Those people who put that carry trade on and then took it off most likely put it back on because of Japan saying we're not going to raise rates anymore, kind of thing. And they're like, okay, now I can adjust my risk model to that statement. I'm going to put this back on because it pays so well.
Yeah, and you can bet there was a phone call from the Federal Reserve to the Bank of Japan and says you will not do this anymore,
Yeah,
or X is going to happen, because they reversed really quick. Okay,
yeah, oh
and then
yeah,
look at where the market is. The market's back where it was. Only took less than 2 weeks.
right, yeah. And I mean, it created some incredible swing trades
Absolutely,
from
they
last
could do it.
week.
They want to do it again. That would be awesome
Yeah, it just make
for
sure you're
swing
not in
trading.
it.
Yeah, exactly. Well, we're not. I'm not gonna be.
Yeah,
I'm gonna be
it's
waiting.
it's
The
like you
charts
say.
show. The
Yeah,
charts show.
yeah, exactly. Well, do you want to get into some charts now?
Yeah, yeah. Let's look at
Okay.
them.
All right. Yeah, I think
Yeah,
you go back to, as Paul says, the charts are always telling you uh what really is happening. And
yeah.
we can see that for sure.
So here's the S&P. Okay. This
Hmm.
is our intermediate, and I use Fidelity Active Trader Pro. They don't pay me to use it or say anything, but it's just the easiest one I like to use. And a lot of people use TradingView or whatever. You can do all this, but Active Trader Pro gives me intermediate support levels and intermediate resistance levels based on the data of the chart. You can see back here, we were up against the intermediate resistance level, and this was back in the middle of July. And then we hit the carry trade week, came down. And ever since that day, and that was August 5th,
Hmm.
we started coming back up through our Bollinger Bands. We went down and just touched and closed right on the intermediate support level. And we've been coming up crossed the 9, crossed the 20, crossed the 50, all the way up back to the intermediate resistance level, which I call the green or the green line of death. Okay, because this is what happens. Okay,
Hmm.
and so now, when I saw this come out, and this is just in the S&P. Okay, I knew that we were going to flatten out. And so if you start looking at some of your individual stock charts, or you start looking at the sector chart, you're seeing the same thing. It's kind of waiting for something to happen. Okay,
Right.
let's look at the cues. Same thing, right? Here we came off, uh, being up around the resistance level, down to support. Now we're back up, and here we are the last 2 days on this resistance level. It's kind of waiting, okay, to see what's happening. Seeing a little bit of the curve on the MACD, seeing a little bit of crossover on the stochastic here. So I'm just being cautious. Why would I want to go in at this point? Here's where I want to be in. Here's where I want to be out in my world
Yeah.
of thinking. Let's go to the Dow. So these big indices tell me, look, here's the same thing. Look at how we did a double top over here on the daily. Okay, and you take that and you move down, and it went right to where it should go. Here's our double top. Went right down the intermediate support line, zoom right up. Here we are, 3 days, 4 days actually, right here on the intermediate resistance level. Okay, again, a little bit of a rollover. See a little rollover on the stochastic. Oscillator is still good, but my price movement, my price momentum in action has gone sideways.
I
And
think
the Dow also.
it's important to recognize for 3 days, it has hit that green line of death. And when you're looking
Yep.
at these charts, you start to notice patterns like that where they hit the same high or high area like you're seeing there, and they go sideways. That is typically an indication of a pivot that is coming. So this is where you get cautious.
Yeah, and it can go up or down. And I'll go into a little bit of that later after we go through all these charts and
Yep.
tell you what I think is going to happen or may happen. So there's their top three charts of the Dow. So you can see, even though 3 days of hitting this level, which I call the green line of death, we'll see if it does this and comes down, or if we actually see a pivot up, towards the upper Bollinger Band. But we'll
Hmm.
go through the sectors. There's 11 sectors of the S&P, and we'll start with communications, which is XLC. And here's the communication services sector. And you can see again, green line of death. In this case, we just came down to the Bollinger Band, the lower Bollinger, worked our way back up, and here's 3 days. Look at that.
Yeah.
3 days right on the green line of death. Okay. So there's your communications. That has Meta in it and other stocks. So you can go look at stocks in that particular ETF, and you're probably going to see a lot of them, stocks that look like this. So let's look at XLY. Okay, and this is the consumer discretionary sector. So discretionary, same thing. We went down, Bollinger Band came up, crossed the 200, crossed the 20, crossed the 50, and we aren't quite up to the green line of death yet, but we're getting close, and we'll see what happens. But consumer discretionary. So you may have a little more here. You can go into this consumer discretionary and look around, see if there's any stocks of interest for you in there. There was none for me at this point, but you can see the same pattern forming. It just hasn't got to the point, of a sideways movement yet.
And the way you can do that is if you could, type your the symbol into, like, let's say Yahoo Finance or Google Finance or something of that sort. Typically, they'll show you the top 10 stock holdings within a ETF or a mutual fund. So that can give you an idea of what, and remember, these are market capitalized weighted, which is stock price times the number of shares outstanding. And that, so they weight the more, like the S&P, I think is what the Apple and the NVIDIA and Microsoft represent 30 to 35% of the market weighting of that index. So the top 10 give you an idea where the skew of how much money is being allocated within that ETF.
Exactly. So if you want to do the work, you can do it. We do a lot of that on the Platinum channel for you and put out a watch list of what we see.
Yeah.
Here we have kind of the XLE. And you see the XLE came up and then kind of hit right on the 20 and then started moving sideways. And now we're heading back down this is the energy sector.
Yeah.
Um, Demand for gasoline and diesel has been down lately, which is kind of a leading indicator of poor economic times.
Yeah.
So just watch this, and even with everything that's going on in the Middle East, you're seeing what's happening. Energy isn't really, spiking up at all. So again, this is a sector that's not doing the same thing. It's going kind of an early indicator heading down. We'll see if the others follow suit or not. XLF, this is the financial sector with your big banks. You can see what's happening here. Green line of death. Boom. Here's today. Okay, we're at quarter to 12. It's Wednesday, the 21st of August. At this particular time, again, I'm looking at the MACD kind of rolling a bit. Looking at stochastic, still doing okay. Okay, and an RSI, 59, kind of looking a little slower, but that's because we're going sideways. Look what happened back here. Okay, this was the end of July. And look what happened over here. This was the middle of July. So that green line of death is working well in the financial sector. So again, when I started seeing this, in the Dow and the Qs and in the S&P, I started looking at sectors and I'm seeing the same thing. So that gives me an advanced indication that these markets are slowing for me right now. And can they pop up above this? Absolutely. Okay,
Yeah.
they got to get past that, and something's got to happen to make that happen. Right now, we don't have a catalyst to do that at this point. But this tells me, okay, I'm starting to see slowness. I go, you can go into the XLF, you can look at the stocks in there. You'll probably see the same kind of situation, going on in the individual stocks, especially the higher market capped ones within there. So when you start seeing that, you're like, okay, something's turning in the market. I'm just gonna hang out and watch it from the sideline. If it starts trending up again, then I'll start looking to see what's trending, get back in if I have to, if all my oscillators and indicators are saying get back in. But right now, I'm just in a neutral position. I'll sit on the side and wait. Let's look at industrials. XLI, boom, same thing. Okay, here we are, 3 days. I mean, it's like a record. You go it over.
I
Let's look at
mean,
utilities.
if you
Go
got
ahead.
rid of the XLI writing right there and just showed the chart, you'd think you'd be looking at the same chart the whole time
Yeah,
as you go through these.
here's XLU.
A little different.
Now, when markets go down, a lot of people, utilities is a safe place investment for a lot of people because they pay dividends. Okay, so in utilities, I mean, we're above the 9, but you can see that a lot. It'll go above the 9, and here's our upper Bollinger. It'll either hit that, or this program actually has a calculation of where the sell orders are, and a lot of times you'll see it might go up, bounce off that, and come back down. But utilities are really more of a flight to safety as far as equities because utilities are boring. You don't see a lot of volatility in their stock price, and they have dividends. So people go there like they go to treasuries, to gain some income off those dividends. So you may want to go look at utilities, but again, until that green line of death, we get a sustained move above that. Utilities is still in the same kind of boat for me.
And I think the thing that can affect utilities is lack of receiving payment for services. And as the consumer gets more, stranglehold on their finances, there is a chance that utilities eventually will say, hey, if I'm Southern Company and, I go from 100% or let's say 90% on-time payments to, 70% on-time payments, all of a sudden that affects their income, their P&L statements. That affects their overall cash flow. And that's something to be aware of.
Yep, absolutely. This is the XLB, which is materials, and you can see the green line of death. We hit it over here again in the middle of July. We hit it here, and again, look, it goes up to the Bollinger Band, came back down, but we hit it at the end of July, at our dump, came all the way back, and here we are, just about back up to the green line of death. Again, we'll see what happens if it hits and goes, or if materials can break out just a bit. Real estate. Come on, real estate. There we go. Look at this. We've been hitting pretty much the green line of death for a while, going all the way back to the early August. Okay.
What's sort of surprising is since early August, mortgage rates have gone down,
Right.
that kind of thing. But XLRE, I think, has probably a lot of exposure to commercial real estate, which is a really troubled area right now because of all the real estate loan or mortgage is more on a 3 to 5 year term,
Yeah.
whereas an individual's residential household mortgage is typically 15 to 30 year. So that's this we could see as if interest rates continue to sustain where they're at, this could continue to be a problem for that group of real estate, commercial real
Yep.
estate. Yeah,
What I'm seeing is a upper Bollinger Band turning down now.
yeah.
Oops, right here. I'm
Hmm.
seeing an MACD that's now below the signal line. Um, so that's usually a telltale that maybe get out.
Right.
Again, this is not the time that I'd be entering for my personal trading plan. Most any of these things, sectors that we're looking at. Let's look at technology. Same thing.
Same thing. Bam.
Yep.
Yeah.
Yep.
It looks like the Qs.
Good.
It looks like
Yeah,
S&P 500.
it
It just
does.
they're all and understand a lot of the companies that are in XLK, which is technology ETF, are the same companies that are in QQQ, which is the
Yeah.
Nasdaq 100 and the S&P 500.
And the Mag 7, that's what
That
they
makes
are.
sense. Yeah.
So here's consumer staples. Okay, so a lot of times you'll see consumer staples do well because you need toothpaste, you need detergent, you need stuff to live on, which is what staples are. It's not discretionary. And you
Right.
can see this in this chart. We don't even have the green line of death in here, and so you've seen the XLP has done well, but right now we're came up and we're hitting at 8205 where the sell orders are at this point. But again, everything looks good on staples, and so you'll tend to see staples and utilities do well in times of distress, okay? Because people need staples. And let's look at one more, healthcare. And healthcare is usually another area that you'll see it looks like staples, or because healthcare, people need healthcare no matter what, okay? And you'll see
Yep.
that also good. So we don't see the green line of death here. It's just following the upper Bollinger Band at this point.
If
Um,
you
so
if you look
so
at
the
the
three,
last, go ahead.
go ahead. Go
If
ahead,
you
Tom.
look at the last 30 days, XLV, XL Staples, Consumer
Yeah.
XLP,
XOP and
um,
XLU. Yeah.
and XLU have done very well in this market. So, which is a rotation, distribution from high risk technology to risk off companies like this.
Well,
Um,
I mean, you've seen a lot of them. They're all gone up, but these haven't leveled off yet. These three,
right.
to the what we're seeing.
Yeah, exactly.
Let's do one more as long as we're here. Let's look at
SMH,
SMH as the semiconductors. You can
same
see
thing.
we haven't got to the nine yet, but we've gone sideways.
Yeah.
You know.
Take a look at the bond indexes, TLT, IEF.
Here's TLT
Mm-hmm.
again, right up to the green line of death.
Yeah.
Okay.
What's interesting
Um,
is since you and I have been on this call, on this filming this, the 10-year US Treasury yield has dropped. It dropped 20 basis points, or it's down basically 66 basis points, which is 66% of 1% in the yield, which means the value of bonds go up. So I'm curious to see if that green line of death holds or if that
yeah.
becomes eventual support in the
Yeah, it'll
coming
readjust if
days.
it needs to. And so what was the other one? IEF?
IEF, which is the more short-term bond index.
There's your 7 to 10 years. So see, this one popped over the green line today.
Yeah,
And I think didn't that happen right after they revised the job
yeah,
losses?
yeah.
Yeah.
Oh, we
But
did,
you can see this is that might be the catalyst to get it past it. We'll see.
yeah,
Or it may be the FOMC or it may be Powell. But the bond, you've said it several times, the bond indexes, the bonds are the lead that tell us what's going to happen.
yeah.
Um, there's no emotion in bonds, basically. The bonds tell us the bond market's bigger by 6 times in the equity market, and
Yeah,
they tell us what's happening, and you can see what's happening. Let's go
it's
to go ahead.
it's been happening since May. It really,
Yeah,
if you take a look at it, it's crazy. It's anyhow, go ahead.
there's Nvidia,
Oh, the
green line
darling.
of death. Yeah,
Yeah. Full disclosure, I have a short position on Nvidia right now.
and they're I think it's a week from today. Their earnings come out, the 28th or
28th.
something like that.
Yeah,
Yeah, so
28th.
we'll see what happens. But a
Yeah,
lot of do you buy before earnings? I personally get out before earnings because it's a crapshoot, 50-50. And you know,
yeah,
these days in these markets, if you don't hit earnings or you don't hit guidance, you're down 20% or you're up 20%. So it's like rolling the dice. And I'm not a gambler.
yeah,
I'm a trader, and I don't risk money on gambles.
yeah.
As much as possible.
When I look at
So
this, I look at that green line of death, and then on my charts, I get a similar thing where the institutions are sitting right now and where they have sat in the past. And this is a major resistance level.
yeah, look at
And
this. This
yeah,
goes back 6 months.
right. And to me, I look at that and I go, okay, if I'm going to use the word speculation here, speculate, this is what I'm looking for. Is resistance on multiple time frames. Yeah.
Let's just look at,
Apple.
there's Apple. There's
Yeah.
Apple. Four,
Same
one, two,
thing.
three, four, 5 days on the green line of death,
Yeah.
waiting.
Yeah.
Let's look at Microsoft. I haven't looked at these today, so this is all new to me. There you go, 2 days touching it.
Hey, it looks like the Qs. It looks like the S&P 500.
Exactly. So
Yeah.
let me go to I'll go back to SPX and no, SPY is where I want. Sorry, SPY, which is the S&P 500. And we see this pattern that we've been watching on, index after index and stock after stock. We're seeing this pattern.
Yeah.
And what I'm looking at is this a potential bull flag pattern? And let me go into something here, and I'll show you here. Where is it? Here we go. And let me share my screen. And what a bull flag pattern is, okay, it is really, after a strong uptrend, it creates kind of this flagpole, okay? And then we see price consolidating in a range, which is what we're starting to see,
Yeah.
okay? And it turns into this flag shape, okay? So this signals a potential, uptrend if it can break the upper trend, okay? So traders often buy when price breaks above the upper trend of this flag pattern. And again, this is just a pattern in technical analysis. And if it breaks above your trend, your upper trend, like here, that's
Mhm.
usually a buy, okay?
Right.
So just be aware that if something can push this up, we could see the markets get past that green line of death, and what is it? Maybe it's an interest rate cut,
Yeah.
something like that has to happen. And then we could see the markets, all the indices and all these stocks go up. But if it doesn't and it breaks below, then we're in trouble. So just watch this pattern, okay, and
Yeah.
see if it plays out or not. So again, just something in technical analysis. We do patterns once in a while. We'll do double tops. We'll do head and shoulders. And this is just a bear or a bull flag is what they call it, pattern, okay?
Yeah.
You have a bear flag pattern that does the opposite and goes down. So let's just be careful and let's just watch for this. And, as the show goes on, we'll watch these patterns, from show to show and see what
Right.
happens. But just, something of interest that you might want to look at.
Yeah. And I mean, we talk a lot about sort of the negative side of things. But when you break down charts like that and you start to recognize patterns, it can create opportunity. And like you're pointing out, we may be in that phase of a bull flag being formed. And if we do
Potentially, yeah.
get into what's 20, we're about 26 days away from the Fed meeting, we could see a continuation of that bull flag being formed. and the Fed meeting could be a lowering of interest rates, which would be a emotional event, and that could cause these markets to rally higher. So it's just a matter of understanding how the charts are playing out and how and what event could cause this thing to go higher, which I sort of 50-50 on right now. I'm like, it could easily.
Yeah, but I'm going to sit out and wait for the pattern or the charts to tell me.
Yeah.
This is the week basically before all the. Yeah, this is the week where everything went to crap. Okay, so we were only in 5 positions on the paper trade portfolio. One lost, and we were up $113. And then the setups came in. So the next week the setups came in. We had over 23 positions. Retail sales report came out. Everyone's happy. That week the paper trade portfolio ended up about 20,000 higher. Okay, and this is when the setups hit. Okay, and then we get out. We had a couple downs, but not too. There's 2. And then this week you can see, we're going sideways. We're only up $205 so far on 1, 2, 3, 4, 5, 6, 7 positions, and 3 are out. But we try to get out of positions, at whatever level you want. I try to do less than 3% loss, and now I've tightened it up a lot to 1%, 1.5. But you can see again, we're at 205. Again, I'm staying out. I'll play a little bit, so we're not always doomsayers, because we do play in the market during this time. We just might play less. We might play less.
Well, and honestly, it's economically, geopolitics, macroeconomics is very negative. But when you're looking for, areas of patterns, swing patterns, it's neither. It's more of, what is the chart telling you? Has it come down to support? Is it breaking through, resistance levels? Is it going to move higher by 1% to, 10% or whatever? And that's that part of, I guess, I always hate the word trading, because I feel like this is investing in this time and age. It's becoming more and more shorter term kind of viewpoint. And so, I think that if you can have the time to put in to understand and practice this stuff, you'll become a lot less risk in your portfolios, but also more upside return in the future. You'll add alpha, which is additional gains over and above the your benchmark index. So I think this is something to. I think most people who have the tolerance and the patience to learn, this is a great way to reduce risk and create wealth.
Yeah,
simple as that.
But you got to work at it. If you don't want to put time into it, it's really not worth your time.
Yeah.
The Platinum Channel has a lot of really dedicated people who learned it, and they're just off there doing the same thing we're doing, just off our paper trade portfolio. They have their own portfolios, and we encourage everyone to start paper trading, learn how to do it before you risk any of your capital. Otherwise, it's gambling. You need a trading plan, you need a trading guideline, or even an investment plan if you're an investor. If you don't have that, you're just shooting at the barn wall and hoping you hit something.
Right.
No target whatsoever, and a lot of traders do that. And just because Nvidia drops 5% doesn't mean that it's not going to drop another 5. It's on sale for 5, but unless you know some technicals that you can base your decisions on, you should know. You should know when you get into a position, what's your plan to get out of it? What's your exit strategy on the top and on the bottom?
Yeah, I think that alone.
That's what institutional people do.
Right. I mean, like I shared last week, I listened to an interview with a 30-year veteran in the London FX market, and he's like, we don't recognize time. Institutions don't recognize time. What we recognize is support and resistance, and we trade those. And you can go back historically and look at, say, the S&P 500, and you can see support, resistance, support, resistance. An event pushes it above, and it creates another resistance level. So, build a trading plan, join the best of U.S. investors, and partake in our 14-day free trial. You'll get a whole lot of information. and will help you along in creating a better financial future in the future. So,
Well, subscribe and like our channel, and you can continue,
yep.
watching what we try to do. We're just two regular guys. We have background in the industry. Okay, I'm more from an operational point of view, and Trent was more from advisor side. And now we're just semi-retired kind of guys, and we sit and we try to help other people not make the same mistakes that we have seen in the past or actually have made in the past.
Exactly.
Yep.
We're very honest about the
And
mistakes we have made.
I don't know who those guys are behind you on the bicycles, but I don't know if that's your neighborhood or those are the guys you hang out with. I don't know.
I don't know. It's it's maybe it's Washington. I don't know.
I thought that was your bicycle club.
No, no, no. We would all be on the ground. So
No,
there.
there you go.
Yeah. So this is honestly this is what AI can create if you can describe it.
So what did you describe?
So I went into Luma, Meta's AI program, and I used to have as a little kid this T-shirt with this big old guy and a couple teeth in his mouth, on a tricycle, and it said "metal pedal to the metal." And I actually created a T-shirt on that you could buy. I'll leave a link in the below. But I described it in Meta's AI program, and I described, I wanted a gang of old guys in white T-shirts, white tank top T-shirts, running through a neighborhood on tricycles with grouchy looking faces. And after a couple, reiterations of it, that's what I came up with.
Wow,
Yeah. So,
pretty scary.
it is when you actually zoom in on the picture, you can see the mistakes. So it's not perfect, but you can pretty much do anything. It's sort of crazy.
That is
And
cool.
yeah, but I got a T-shirt line that I just go in there, and it's Disco Duds on Etsy, and I just come up with these crazy ideas. So, and sometimes you see them as my background. So yeah, so that's what you could do with
God,
AI.
a Grinkmeyer with a crazy idea. I've never heard of that
Oh
before.
no, I don't know where that came
Does
from.
that run in the family?
Oh no, not at all. Everybody's really normal in my family. Oh, well,
All right.
thank you for sticking with us. And in the meantime, be safe, and always live loud. And we'll see you. Peace.
And cut. You and your giggle.
Oh.